Good morning, Eric. Good morning, Erica. Good morning,
Good
Holly.
morning.
Good morning, Audra.
Good morning.
Good morning, Aaron.
Good morning.
Do we have our lender in today?
Do we have our lender man?
Uh-huh.
We certainly hope so. I want to disassociate for the next 30 minutes, and I can't do that if Sam's not here. If you guys don't understand what disassociating is, it's when you zone out, do nothing. I don't know where Sam
Know
is. Where is
all about that.
Good morning, Lydia. Good morning, Jim. Good morning, Trey.
Good morning.
Let's hear from you. What are your wins, your celebrations, something you're just dang proud of?
One of my buyers that I was working with just contacted me. She wants to start looking again.
Atta girl. That's awesome. That's great news.
Yes.
Good to hear. What about the rest of you used guys?
So
Made
mine's
it
kind of
another offer.
personal, but I was diagnosed. Well, I have adult ADHD, and so it's been a struggle. And anyways, they put me on some medication, and I can actually focus, and it's nice.
There you go. You're all, I can see clearly now. The squirrels are gone.
I was folding laundry this morning, and normally that's not me.
That's awesome. Well, good for you. Good for you doing the difficult task of accepting that you need some help. And that's a good thing. We all need some help.
Speaking of which, does anybody ever mess with that mushroom coffee stuff?
No.
I know you're not a coffee drinker, but
My cousin
no.
swears by it. She always tries to get me to drink it, and I'm scared.
I'm thinking about buying some, checking it out
Well, let me know how it works.
on my transition back to normal life.
Sounds like a terrible idea, Jim. I've heard of some
Well,
bad ideas before.
you got me
This
drinking this green crap.
and have you not seen improvements?
To be determined.
You shut up.
I wish
It's
I could
funny because
try it.
my doctor told me to drink coffee because it keeps me stable.
That's I mean, there's the ADHD thing there's for sure. Like if you're
Yeah,
gonna
she
miss.
told me. Yeah, because she didn't put me on traditional. I mean, the medicine I'm on is ADHD medicine, but it's not the narcotic. So it's pretty good. But she was just told me, she's like, yeah, drink caffeine, if you feel like you need it. She's like, there's nothing wrong with it. It's like that's all I had to hear.
That's it. There's nothing wrong with you.
I drank way too much caffeine.
I don't drink very much at all. I used to be caffeinated. And so my problem was I wouldn't sleep. It would like really, really mess with my sleep, and that wasn't the thing. I need good rest to keep you guys from going crazy. All right, I don't know if Sam's making it. I just asked him if he's still sick, and he's texting back right now. But it also is 7 o'clock in the morning, so he might have just forgotten, which is fine. Do you guys ever have buyers that want to buy a house but have to sell the house that they're currently in?
Oh yeah.
That's what I'm doing right now.
Yes.
So Steve Lemons, not that we don't love Sam, but Steve Lemons' company just came up with a new program for that specific thing. Bridge loans. Anyone ever heard of a bridge loan?
Oh yeah.
Yes. Uh-huh.
Yes.
I'm actually doing one right now. That was my all day yesterday.
How are your four offers? Anything?
One, the seller decided to pull off the market. The other one, we have home inspections today. And we have one that's in short sale, so we're waiting for the bank.
We have the bridge loan. We have one that I submitted and we haven't heard anything back yet. And then I'm working on another one right now. I just sent it to them last night.
Oh, that's great.
That's awesome, dude.
Mm-hmm.
Eric's got some things cooking.
But
All right.
yeah, that's a funny topic that you brought up because I'm actually trying to work something out for my client that's out in Tennessee. They want to sell their house and move out here. Found them the perfect house, but they needed to make a decision fast and they're ready to go. But they thought they had to wait for their house to sell. And we have good relations with our lenders down here. So I got in contact with them. They said they have bridge loans, but they also have a buy now, sell later type deal program that they're going with. Where they're able to purchase down here and then sell their house in Tennessee at a later date.
That's awesome.
Yeah.
Guys, this is what happens when you sit down and work every day. You find business. Look at Eric finding business. So Steve's message about bridge loans. He goes, bridge loan we now offer as a deal changer. No payments on current home until it closes and only costs 2 points. Everyone is going non-contingent that has equity and good credit. We need to chat about this. We tailor-made it a bridge loan internally at Fairway, and it's really helping. It gives them 6 months to sell from closing, and the interest accrual is only 7.25, and the interest is deferred until the home sold. So, but speaking of loans,
Can you explain that a little bit more, Dan?
no, I can't. We're going to need a lender to do so, so I will bring him in to do so.
Cool.
Sam,
Good morning.
bridge loans.
Yeah. Is
You
that a
guys-
statement or a question?
You have an offer product for it?
Yeah, there we had so being on the wholesale side, we get to work with there's 4 really good ones offered by different investors. They all have their own nuances. They're all kind of designed for different clientele. But all of them decent options. What questions specifically, or just like a general overview on a bridge loan?
Just a general overview. My clients right now, that's they were offered a bridge loan, but they're kind of against it for some reason. And I'm meeting with them today, and if that's a good option, I'd like to break it down to them.
Yeah. So any other type of loan is typically going to have a prepayment penalty, or they just will not allow you to pay it off in under 6 months. A bridge loan is designed for that short-term financing. It's really dependent on the amount of equity they have in their home. So if I bought a home today and then tomorrow I wanted to try and use a bridge loan on it, probably wouldn't be possible. How long have they had their home for?
It's completely paid off, and
Oh,
it's valuated at around like 650 on the lower end, and they have a 840 credit score. They're retired, so they were going to just pull out of a HELOC, but their debt to income ratio would be too high to pull out that much, so they didn't have the option to do that.
they potentially might run into the same issue with the bridge loan. So explain they just don't have income for.
Yeah, they're pretty much just getting Social Security right now. So the house that they want to buy is 450, and with the HELOC, they could only pull out I think around like 200,000 with their income.
Okay. Let me look up this one investor here. Let's see. We can. So if you want, I can connect with you after this once I get a little more.
Yes, 100%.
Okay. Yeah. So bridge loans, really the big nuance between that and like HELOC or a normal fixed first is it's not going to have the prepayment penalty that those would. There are other nuances to them, but that's the big differentiating factor. They are more lenient on stuff like DTI, but they still follow those same rules. But yeah, I'll look up the specifics. We'll chat a little bit and kind of figure out where we're at with that one.
Okay, thank you.
Yeah, absolutely. Actually, you know what, Trey? I don't think I have your number. I'm gonna shoot you in the group mine. Shoot me a text really quick.
Dan just texted me your number. I'll shoot you a text.
There we go.
Oh wait, no, he didn't. Never mind.
Wait, okay, it's coming. Hold on. All right. How's everybody else doing?
Great.
Good.
Sam, what are you seeing rates lately? Well, tell us what you've seen since the beginning of the year, since we haven't seen you.
I know. Oh my goodness.
Guys, he doesn't love you anymore. He abandoned you for
for the common cold.
the common cold.
I know. It's that easy. So I mean, honestly, you know, I was well, okay, so since the beginning of the year, I think mortgage applications we've seen a pretty drastic increase year over year, which is always a positive sign. Typically, we don't see the housing market really turn on until after President's Day, and kind of start capturing that spring market. However, love or hate him, Donald Trump is really focused on reforming the housing market currently. So there's you know, there's obviously a lot of talk. There's always a lot of talk before there is action, but when the action does happen, you do something big, like, you know, kidnapping foreign leaders or something along those sorts. So who knows what's actually going to happen? But what's being proposed right now, other than the 50-year mortgage, is Fannie Mae and Freddie Mac, the two like insurers of conventional loans, buying mortgage-backed securities. So that is a really big deal because every insurer of mortgages has to maintain a certain level of liquidity. So FHA, for instance, they have to maintain a super high level of liquidity that's paid for with their mortgage insurance and upfront premiums. That liquidity is there to make sure that they don't go under as an agency. So they can have a certain number of defaults, and them as a company will not fail. And these rules are set in place. This kind of all happened on the mortgage reform, you know, circa 2008, to ensure we don't have a huge housing crash again. Fannie Mae and Freddie Mac had changed their liquidity rules around 2020, and a lot of people thought they were in excess of what was actually needed. So they're sitting on like $200+ billion in cash reserves, in excess of what they need to meet their liquidity standards. And Trump is directing them to buy mortgage-backed securities. So that won't happen all at once. It won't be an overnight sort of thing where we'll see this, you know, massive dip in interest rates. But I would anticipate, if rates naturally come down to, let's say, like 5.75, injecting $200,000 into mortgage-backed security purchases potentially could bring rates down to like 4.75, so a full percent lower than what the market is sort of dictating them being at. So good thing and a bad thing, right? Whenever we see rates decrease, what else happens? What was that, Andra?
Prices go up.
Yeah, you and Eric both, he did the gesture. I'm guessing he wasn't trying to hitch a ride, but yeah, same thing. So prices go up, right? And at this point, if prices go up with the current economic state, I mean, obviously the economy is improving, our dollar is strengthening, you know, there's some positive things. It's just all those things are lagging indicators. But if prices went up today by, let's say, 20% and rates went down by a whole 2%, do you think that solves you know, the grand scheme of things, that solves a big problem, or does that kind of keep things where they're at?
Status quo, if worse.
Yeah. However, buyer perception, that's the only thing that really changes. And that's what we're really seeing change this year, is buyer perception is changing, which I think we needed this sort of overhaul in like just perspective. So there's a really good, I don't know if you guys listen to podcasts, but there's a podcast that I just kind of started listening to, and I just my favorite podcast now, and maybe don't hate me for this, but you guys know who Sean Ryan is?
No.
He's got amazing people on there, but he interviewed this guy who runs don't quote me on this, but it's basically a CPA firm to kind of help people save money on taxes and whatnot. But they were talking about these things like the 50-year mortgage, just kind of overall affordability, the American dream. And the topic came up of like generationally how the American dream has sort of changed, and we have become like, I hate using this term, but sort of softer versions of ourselves. And
Physically and custodially. So
yeah, yeah. So I mean, on the one hand, these things are good. We need to have more affordability. We need to have different options, but at the same time, in the long run, a 50-year mortgage, rates that are artificially low, housing prices that are going up, those are not all great things. But again, that's why it's so important for us as professionals to be able to like coach and advise our clients on, yes, hey, there's all these options out here. Here's kind of what makes the most sense. Here's what we should be trying to accomplish, and not letting people get over their skis. But overall, not to get off on a tangent, year-over-year mortgage applications are increasing. I think buyer sentiment is improving. I think people want to buy and sell houses. I think we're excited about the prospect of 2026.
yeah.
What do you guys see?
I'm seeing an increase in buyer traffic on listings that have been sat for a while. So we're definitely seeing some movement there. I'm seeing more agent engagement, which is probably just because it's, the holiday hangover's over. So they're like, let's get back to work.
Sam, what was that podcast you said?
It's Sean Ryan show.
Okay.
I think you would like it for the little limited amount that, yeah, it's a good show. Yeah. Anybody else? Any insights? Any questions? What's been going on in your world in 2026?
All right, off mute, cameras on, be participatory.
I've been seeing a lot more buyers that I started working with last year actually coming back saying that they want to start looking again. And I got like 4 people in a credit building program right now because they've become a lot more motivated this year to buy their first house, and 2 of them are pretty close. We're like a few weeks out to a month, so
Nice.
I'm here. I see homes, one of my homes, look like people are looking at it. And some of my buyers too plan on selling this year that I haven't spoke to in a while. So I'm getting the same thing.
How about California market?
Gosh, if only we had someone in the California market on.
If
Jim
only
Fuller.
we had people actively engaged.
I was gonna say that bad, huh?
That bad, huh? Well, guys,
So
you guys make this real tough. You know that? I need you.
maybe because it's a Friday.
Is that what it is?
We
You
need,
guys
like-
having a
We
Friday?
need like a hype song.
Is
We
it
need
been
a
a
hype
long
song
week?
again.
Right.
All right,
long
so
ass
maybe we
week.
just ask a different question. Who do we have for the whole NFC? I mean, is it all Seahawks this year? I think it's all Seahawks this year.
Oh,
the
no, no,
Seahawks.
no.
Y'all can
Didn't
suck
the
it.
Seahawks get beat out by 49ers?
No, they will not.
It's
will not,
going to
Eric.
happen.
I
It
hope
will
the-
not. It is
I
not
hope
gonna
the
happen.
Seahawks as a franchise get folded and sold off to some Midwestern state.
Oh man.
But no, down here well, for me, I can't say down here, but for me it's been extra busy. December was insane, but everything that I did in December is coming to life in January. So last week and this week have been absolutely insane. And people I was talking to the beginning of last year all of a sudden are popping up and be like, hey, sorry we ignored you. Things have changed. We still want to use you. Um, and then everybody that I've been working with or nurturing between the end of last week and this week have just come out and we're shooting offers out left and right. And they're getting good rates. I mean, I encourage them to shop around to different lenders. Um, but they're getting good rates. They're getting good houses. They're getting, $10,000 in seller concessions. Like they're doing really well for on the buyer side. I don't know much about the seller side. I work primarily with buyers, but buyers are coming out of the woodwork and they're noticing that change in rates and they're just shooting for the moon at this point.
Yep.
Well, that's what we're hoping to tell sellers, right? It's like we're seeing increased activity. So for those listings that have been sitting for a little while, it's like a little sliver of hope that there might be something come down the pipe. And this is for people, I'm obviously referring to those clients that don't listen to reason and lower their rates to what we recommend they should be to get them a buyer anyway.
Yeah, I think we really have, I said this, I don't know, I think it was back in December or something like that, but we have like a month, I think, where there's gonna be really, really great opportunities for buyers because President's Day typically is when the market starts to sort of heat up. We're already seeing rates kind of come down. People's sentiment is changing around purchasing, but sellers are still they're still kind of dealing with what's happened in the past couple of years, which is like, shoot, do we give up concessions? Do we let the house sit on the market? Do we keep paying this higher payment? And so there's a lot of opportunity before seller sentiment changes as well, right? The only thing that will push up the overall price on houses is obviously seller sentiment. You can have an increase in buyers and have the market sort of stay flat until you have the feeding frenzy kind of happen or seller sentiment change. So I think there's this really narrow window of opportunity where if you have people that are in the market right now that are that want to buy in 2026, man, now's the time to do it before it starts to go the other direction.
What do we think we're gonna see, Sam? So I have a listing that's been sitting, that's in Sarita, and it's really tough there because we have so much new build activity. Do you think, I feel like builders have already been giving such low rates. Are you hearing anything or is anyone seeing anything in terms of like how the resale market is impacting that, if at all?
Well, the only way that builders survive, like the ones that are they're actually doing nominally well, I guess, had either invested in their own mortgage company, and that mortgage company was buying basically bulk rates or forward commitments. And that's the only way they survived in the last couple of years, just because of the overall like what inflation did to housing. New starts is usually the biggest place or the first place we see inflation show up. So there is this disparity between like new construction home being able to offer not artificial, but under market interest rates, and then in order to combat the price compared to existing inventory, and that's been something that, like, depending on the market, has been kind of it's an interesting topic of conversation. I guess like what that looks like going forward, I would almost guarantee that as the market starts to heat up, meaning more buyers enter it, builders back way off of those incentives. If you look at rewind even 5 years, and builders weren't really doing anything. Like, to get them to pay for a paper handout of their listing was almost impossible, because they knew that just by having a house, they were going to be able to sell. Then you kind of fast forward into this market of hyperinflation. Now they have to do something to get those their inventory to sell, because otherwise they go bankrupt. I don't know if that answers your question, but
Yeah, it kind of did. It reminded me, actually, because I do remember, since I've started, I haven't seen builders not offering like buyer broker compensation, but I do remember people talking about like, oh, remember when Lennar used to not give anything? So I guess that's a good point, is they're going to pick up those margins elsewhere potentially.
yeah, really the only way that they've been able to survive is by doing stuff like that. So as soon as they cannot do that, trust me, they will not do that.
Yeah, I guess at the end of the day, even still, they'll be still below what resale is if that's what folks are going for.
Mhm. It does impact, like, sorry, it is an interesting market because it does impact stuff like that with existing builds. You know, when you look at like overall quality and if the cost is the same, but the barrier of entry is much lower on the newer product, people are always going to default to the newer product. You know, I mean, not always, but it as a general rule of thumb, right? So it does kind of pose a unique situation there for sure. Who else? What else we seeing?
I'm seeing a whole bunch of agents use this as entertainment and not engagement.
Hey man, I like to think I'm funny.
I have a question. How are the VA loan interest rates right now, compared to like normal person interest rate?
Normal person?
The VAs are not normal people. Have you met these people?
No, no, like no, a person that's not getting a VA loan compared to a person that is getting a VA loan.
Yeah, generally speaking, VA loans, so VA and FHA are generally significantly cheaper than a conventional is. The only difference between FHA and VA, so FHA will have a higher APR because of all their upfront costs, where VA is just a single funding fee, which can be waived in some cases if they have more than 10% disability. Very long way of explaining that VA loans are significantly lower in interest rates than like a normal conventional loan would be. I locked one on, was it Thursday? Not this Thursday, last Thursday. We got a 4.99. So that was a forward VA purchase.
Dang, that's crazy.
Damn, that's nice.
Yeah.
Thank you.
Yeah. So definitely ways to save money there for sure.
Are you seeing a lot of like, I guess my one other thing that comes to my mind, Sam, is like our buyers that maybe were hesitant, but then they went ahead and pulled the trigger, that are now going to start seeing these rates, right? That are like, ah, shit, like I should have waited like X amount of more months or something. Can you remind me, like, if they are looking at refinancing, is it dependent on the loan type, on how long they have to have the loan before they can look at refinancing?
Yeah, so there's I'll tell you the absolute truth, and then I'll tell you what I tell people, okay? Because sometimes you have to be careful on telling people the absolute truth. The absolute truth is that they can refinance whenever, right? Well, they can refinance whenever. With some loans, like a DSCR loan, for instance, someone is going to get a better rate if they retain an early payout penalty during origination. So you'll see like a 1 year early payout penalty term, or 2 or 3, in order to get a better rate. Assuming there's no prepayment penalty, every loan is going to have a 6 payment maturity, meaning that they have to make 6 payments before the originator or the investor is hit with a prepayment. So after the mortgage reform, prepayment penalties, that's a really tricky thing to say. Prepayment penalty, goodness me. Those in like 9 times out of 10, those went away. But the originator or the investor was always hit with it. So when the buyer's not charged, the originator is. So we always say, hey, you got to make 6 payments before you refinance. The reason we say that is I had this happen like last year. As the older VA couple, they bought this house. They just got their math wrong. They made 5 payments and then paid it off. And December 27th is when they hit my account. They debited like $8,000 from my account because they paid their loan off 5 months early instead of 6 months. So it sucks to have that happen. So
Yeah.
So I don't have to work for free. I always tell people make 6 payments before you refinance. But they can refinance whenever. It's just going to hurt whoever did the loan initially. So if they're my clients, they're making 6 payments. If they're anyone else's clients, I'll refinance them tomorrow. That's a really shitty way to put that, but that's how it works, right? You just in terms of like what I'm sort of coaching people right now is, yeah, like rates are going to change. They're going to ebb and flow. I think really we're going to probably see the most ideal rates like within like the fall sort of the end of summer fall market, potentially going into next year. So they have time to buy something now, make that 6 payments, and then
Yeah.
refinance. You can always refinance your rate. The equity is what you won't be able to get back, right? So instead of like, I've had people that are like, well, why shouldn't I just wait till rates come down to the 4s to buy a house? I'm like, yeah, you can, but then that same house you're buying with a 4% rate is gonna be $150,000 more expensive.
Yeah.
No, it's your call.
Follow-up question. Is your image reversed? In this, like
Is
how
this
this
a
shows
mirror
up?
camera? I don't know. Potentially.
Basically, the long and short, I'm asking, Eric's smiling, maybe he knows what I'm going for. Is your field of blue in your top right or your top left?
Is my what?
Your field of blue in your flag.
It's in my left, top left.
Okay. Phew, we almost had a problem there for a
Yeah.
half minute.
Yeah, no, top left.
Eric picked it up as soon as I was
I'd like to
asking. He
point out
started
that-
Does it look backwards to you?
Yeah,
Really?
Sam's been on this call.
Oh.
I know,
For
and
a
I just
year.
noticed it. This is my
You
squirrel
know.
brain, Dan,
So.
in its best form.
All right, you
I
and
love
Aaron
it.
need to get together and talk about the medicine she's on that was left hold on her this morning. Guys, thank you so much to Sam. His number's in the chat. Take the opportunity to have someone run it and vet it. Get Sam on it. He's pouring into you. Let's give back to him. You got buyers shopping rates. Give Sam a crack. That's all I ask.
Give Sam crack. That's what I heard.
Yes.
Squirrel brains.
Squirrel brains.
Thanks for having your eyebrows on this morning.
I know.
All right,
Lydia
y'all.
saw me without my eyebrows
All
at
right,
the
guys.
conference.
We are off on Monday. Christine, I know you're supposed to do your notes thing on Monday. The office is closed for Martin Luther King Day, but we'll do the note thing on Tuesday instead.
Love it.
All right.
Cool beans. Thanks,
Cool beans.
Sam.
All right, guys.